All right, well, let's go ahead. We did have our guest popped in early this morning. We've got Mish Schneider hanging out backstage. Always a pleasure to have Mish on, talk about the modern family, what's going on in the economy. So without further ado, let's go ahead and give Mish our special pre-market prep welcome and see what she's been watching when we get back.
Mish Schneider, Chief Strategist, Market Gauge, author of the Market Minute. Mish, how you doing today?
I'm doing great, Joel. Good to see you. I don't think you were on the last couple of times. Whoops.
Yeah, I take vacations every once in a while. So something just came to me, and I've always liked you as a guest, but like now I realize why I really like you as a guest. Are you ready?
I'm ready.
Your name, your nickname, Mish, right?
Yeah.
I'm a big Michigan fan. Okay.
Uh-huh.
And there was an announcer, the greatest announcer of all time, if you guys haven't looked him up, but he used to call it Michigan, okay? So you got to change your name to Meech for Mish, okay?
Can you do that for me?
Yeah, could you change that? But no, I'm just giving you a hard time. We always love having you on. So much going on here in the markets. I know you like to talk sectors and everything, but I guess first we have to set it up in the backdrop of the election and interest rates. So that's what I'll throw at you first.
Okay. Well, obviously this election, it looks like, and there's been a lot of buzz. It depends on what you read. But if you read Twitter, I mean, it seems like Trump's going to win by a landslide. If you read other reports, they're at dead heat. So it's very hard, I think, to make the prediction because we don't really know what's going to happen when people actually go and vote. Although a lot of people are early voting, we did. But nonetheless, what I prefer to do at this point is look at the commonalities between the two candidates as opposed to what makes them different because they're both so different. But they both have a couple of things they say that to me means that it's almost like a lock that these will move. One would be Bitcoin. It seems like both candidates are very pro-Bitcoin. And we can see that Bitcoin right now sitting above 68,000. It's doing what the modern family, which we'll get back to, is doing, which is essentially consolidating, some obviously consolidating at higher levels than others, but all consolidating and none have broken out yet from this massive consolidation. So I keep my eyes on Bitcoin. Number two is clearly, I think that there'll be defense spending by both, maybe more so under a Harris campaign than a Trump, because, Trump, a little story for you guys. So one of the things that I do regularly is I go on CNBC Asia in Singapore. And when I'm backstage in the green room there, I get to hear speakers that you would never hear in the United States. And there were three before I went on last week. There was a person from Japan, from the EU, and from Australia. And all of them expressed fear and concern of a Trump win. And my guess is because they feel that there'll be an isolationist attitude by the United States. And they kept saying, we just want to make sure that everybody in the United States remembers we are your allies. And so that's interesting to me. So I go back to defense spending means maybe, there'll be a little bit of difference depending on who the candidate is there. But the bigger key is they're both going to spend money. And so that is really essentially what you have to keep in mind is that the debt that we have that neither candidate is really dealing with. I've heard a couple of comments by Elon, but as far as I know, he's not running for president. And secondly, yeah, right. And secondly, they both will spend a lot of money. Republicans and Democrats spend money on different places, but they both spend money. Why? Because obviously they want the people in the United States to keep them popular. I mean, it's such a poll-driven type of presidency. So that means inflation to me, even though right now it doesn't look that way because of certain things that have happened, like with oil. But nonetheless, gold and silver are, when they dip, they're probably buy opportunities because I think they're representing what could happen.
What about the China trade? Let's talk this, Mish, because let's just say hypothetically, scenario analysis, that, social media is right and let's say Trump wins.
Okay.
What is either way, let's say Harris wins too. Let's just say both scenarios here. I kind of think and I think it's pretty obvious if, Trump wins, it's probably not great for China stocks because he seems like he's going to be harder on tariffs. I mean, they're both talking tough on China to a certain extent, so maybe neither administration is going to be great, but I think Trump is talking a lot tougher on China and tariffs. What are your thoughts here on the China trade going into the election?
Well, first of all, I think, and I've read some stories that the percentage of the GDP for China based on exports to the United States is not as large as one would think. And yes, there's a lot of tariff talk, but you have to realize that China knows about this and has been preparing for this through a couple of ways. One, obviously, is through the tremendous amount of stimulus that they started out doing. They've pulled back. And I've heard, again, in Singapore from some people that they've pulled back because they're waiting for after the election to bring out the big guns of stimulus. So China has and can afford to add a lot of liquidity to their system, number one. Number two is they're already in alliance with Russia and a few other countries through the BRICS. And I know they have to be thinking to themselves, well, gee, if we're going to be excluded from working with the United States, then what are we going to do to either A, make ourselves get back to at least closer to a 5% of the global GDP, which is what China used to be centuries ago. Now it's down in the low fours without the United States. So what does that mean? Sell dollars, sell treasuries, that's that whole BRICS thing that's going on. I'm not too worried about China. In fact, I would be more worried about emerging markets as an investment if there's a Trump win than I would about China. And I actually think that China might be a really good investment, regardless of who wins.
All right, let's get to sectors here, Mish. And, the bonds are telling us one thing. You've been around for a while. You've seen the bonds trade. It's like, hey, folks, put the brakes on another rate cut in November. Put the brakes on things. So there's, you got the small caps. You have your retail. You have your biotechs. They're all, we won't talk about solar because I don't think anything can help solar right now. But of those sectors that I just mentioned, which one will benefit the most, or will they all benefit the same if the Fed continues on this dovish policy?
Okay, well, let's talk about solar for a second, because if you look at the technicals, solar made a big gap up if you're looking at TAN on Friday. And with the news of the lithium mine in Nevada, essentially what the government is saying right now is part of this whole let's get away from our dependency on China for rare earth minerals, which NP Materials has been one of our positions. And now let's get away from our total reliance on China and Chile in lithium with the goal of making 370,000 lithium batteries for EVs over the next 4 years. That doesn't tell me that solar is dead. It just tells me that it was sleeping. So I wouldn't necessarily dismiss it. But going back to the other areas, I think the biggest gift I can say, or at least when I say gift, what people really need to focus on, if they're looking at the major sectors of the U.S., if we're really going to see the Fed go more dovish, yields have just been going straight up since the cut, and we have a November meeting coming up, you have to look at this massive consolidation that we've had, let's say, in retail. And I'll pick out retail more than any of the others because it's going to be about the consumer. And both candidates are going to want to make the consumer happy. The Fed right now doesn't seem to be as concerned unless they see recessionary factors, which so far they haven't. And if you look at XRT, 10 months, guys.
I know, look at that.
10 months. Look at a weekly chart if you can, because that's even clearer to me.
Wow.
Okay, look at that weekly chart. If you go back to the beginning of 2024, forget about that first initial dip. Really, basically, between 70 and 80, we have trade since February.
Wow.
That's 10 months of a $10 trading range in the consumer area, which is both staples and discretionary. And to me, if you really want to know what's going to happen, and you don't want to think politically, but you just want to think in terms of patterns in price and the consumer trend, and you know I'm all about the thin consumer, that could help. You've got to watch this XRT reconcile this massive trading range. Could NASDAQ keep going up? Could Meta and Apple and Google and Nvidia keep going up? Possibly. They don't seem to care about the interest rate so much. But if you want to see that rally sustain and you really want to have some fun, if this is really going to be a bull market, granny retail has to pick up the pace here. And right now, it's sitting smack dab in the middle now, 76. So there you go. That tells you everything right there. I don't think that we really know what's going to happen yet until we see what's going to happen in that area.
Mish, what about Tesla here? Because we had Tesla pop after earnings last week. I know this is a stock that you watch. Kind of an interesting level here, right around $270. Do you think the positive price action for Tesla will continue here?
I do, actually. I think that Tesla can go to 350. That's kind of my next major goal here. Yeah, Tesla, again, is, it seems to be in its own universe, and it's got a lot of things going for it. I mean, certainly the announcement of the lithium mine is good for Tesla because they need the batteries. They are more than just a car company, clearly. Obviously, the projections that he said was a best guess, Elon, last week about car manufacturing helps. I think this is, to me, since this is the granddaddy, like I have my grandpa in Modern Family, but this is the granddaddy of EVs, clean energy, and where we're going in terms of what we have to do as a global area. And that's really get away from the tit, if you will, of oil and gas. I mean, this is definitely where Tesla represents, and I think it's actually a little bit maybe even undervalued if you're looking at some of the other Mag 7 stocks.
All right, Mish, first of all, I just want to go back. Sorry if you had to follow, do it after this, but I just wanted to tell you that you have your first own indicator here on PMP. I don't think I've done this for any other guest, but I like what you said so much. On October 28, 2024, this has been labeled as the Mish range. So when we break out above 80, I'm going to be 80 bid. And if we break down below 70, I'm going to be headed for the hills. I hope it doesn't take another 10 months for that to happen. But I'm going to save my layout after there. You're the first person I've done that for. AB, did you want to follow up, or do you want me to go into commodities here?
Go ahead. You can transition to commodities, Joel.
Okay, so interest rates are going down because we've whooped inflation, right? But then I look at some of these charts. I look at sugar. I look at, some other things. I look at my bill when I go to the grocery store or pick up food. So, I mean, is the inflation story, completely over? Is it time to start looking at the commodity markets? Tie this all into our chat on interest rates.
Well, in terms of the interest rates, well, it's interesting because let's go back to what we briefly said, which is with the 50 basis points cut, we've done nothing but see yields rise here. And a lot of this is the reflection of Japan. I mean, there are a lot of people who still think that that's going to be a big factor. And the yen fell, and I know they had a big vote, and the coalition party did not make it. So there's a shakeup going on in Japan, which of course has helped our yields and also our dollar as flights to safety. So in terms of the yields here, I mean, yes, I think the Fed is looking and saying inflation, maybe we're not going to declare it completely over, but we think it's basically over, although we have not really gotten our core numbers down to 2%. You can cook them as much as you want, but the truth is we're not there yet. So inflation to me right now is not necessarily following the narrative that I like with my trifecta, which is silver outperforming gold, the dollar under 100. We're certainly far up from there. And sugar trading over, let's say, 22, 23 cents a pound. None of that has really happened yet. So I guess the best answer I can tell you is I wouldn't be convinced that it's dead. China, when we had that first round of stimulus, all the commodities went up because China requires a lot of hard assets. We don't know what's going to happen with the debt. And we don't know what's going to happen with the spending. A lot of people think this is a bubble that can sustain, that once we get to a certain level of debt versus the GDP, that we have to have some kind of a break. So all of this could help certain commodities, not all commodities. And I think you just have to look at gold and silver right here. I mean, gold is at what, 27.46 today. There are still so many bears out there. And I'm like, why? I mean, gold is the mirror reflecting the cracks, and silver, which is, it didn't quite stay at 34, 35, but where is it now? Like 33 something and change?
33.70, yep.
That's still a breakout over 32.50. And I don't think that the metals are telling you essentially what you're seeing. Like, say, if you look at soybeans, which are, have crashed, although they look like they could be bottoming, it's telling you to be careful and to still watch for the inflation trade. But we're traders, right? Joel and Aaron and Dennis, we don't buy a falling knife or an anticipation unless we see a real good risk. Just wait a little bit. I think it'll be obvious that it's time to start piling back more into the commodities plays. And you should already be in gold and silver, by the way, and even copper. Copper may not necessarily be at its highs, but it's still holding pretty well. I mean, you just put up the copper chart. Look at that chart. I mean, that to me looks like you had your bottom. And now again, I hate to overuse the word consolidation, but it's consolidating. So to me, there's a lot of potential in the inflation play. I'm watching it very carefully in terms of our own positions. I wouldn't buy necessarily natural gas, but if you look at LNG, that looks pretty explosive right here. So, pick your places. But again, think AI, data centers, EVs if they pick up, all this mining that they want to do in the U.S., all this manufacturing they want to bring back, all this deglobalization that's being talked about right now, that's all inflationary.
Okay, Mish, before we let you go here, I just want to go back to something that we talked about at the beginning of the conversation, and that was the election in the prediction markets and what they're indicating right now. No position, not taking any position, but I think there's one very, very fundamental flaw in all of the prediction markets.
What's that?
Are you on a prediction market?
No, I mean, I watch them and
but do you have an account?
Oh, no, I do not.
Mm-hmm. Okay. So that's all I'll say.
Why? Okay, I don't follow you on this, Joel. I want
because women are a big part of the voting population.
Oh, yes.
Well, the other thing too, like in Polymarket, U.S. investors aren't allowed to.
Yes.
So I mean, you've got a U.S. election, and it's got no U.S. investors, in the price discovery process here. So it makes it very difficult to, and they're even cracking down because they're saying some U.S. and traders are still getting in here, and they're trying to crack down on it. So it makes it difficult to, when you look at a Polymarket, you see right now, I just brought it up, 66% Trump, 34% Harris, but there's no U.S. in there. Like, there's no U.S. investors making their bets in there, and they're the only ones that can vote. So it's hard to give it a lot of weight. I think I don't know if it's a dead heat like some of the major media is saying. I don't think it's a blowout like Polymarket's saying either. I think the real answer is probably somewhere in the middle.
Yeah. Well, just go back to the women, right? Because you're bringing this up because I am a woman. I don't know, it's to me the X factor in terms of the women, because again, you don't know what the polls are saying, but it's going to be with women's vote, essentially women think two ways. Obviously, they think economically, so they're going to think who's going to be better for the economy. And I'm not necessarily sure we know exactly who's going to be better for the economy, because we hear a lot of talk, but we don't really know. And how much can a president really control the economy? Let's face it. I mean, Trump was doing very well with keeping interest rates low, but we were a completely different time in 2017 and 2018 than we are now. And then COVID happened, and he was the first one to sign checks over to people. And Harris, we don't really exactly know, except that we can kind of assume that it'll be somewhat Bidenomics. I mean, that's been the big talking point. So when it comes down to women, they're going to say, well, I have maybe more money than I had before. Inflation's coming down. When I go to the grocery store, I'm spending less, etc. I feel like that's okay. It's really going to come down to whether or not they really have a concern about certain things like LGBTQ and abortion rights, how socially liberal women want to be. And that's really hard to predict because we've seen movements where there are a lot of women who are what would seemingly be on the other side of what's best for women, right to choose, et cetera, because they have other agendas, whether it be more of a religious agenda. I really don't know. I mean, it's really interesting. I think there'll be women who'll go to the voting booth and have told their husbands they're going to go vote for Trump, and they're going to go in there and go, hey, I want a woman. And they're just going to check Harris because nobody's going to know. They're going to do it just like the opposite. There are women who are saying Harris, Harris, Harris because I'm a woman, and they don't want to seem like they're anti that. And then they're going to go in and vote for Trump. This is so interesting to me. I've always predicted who was going to win. And when Biden was running, I thought it was going to be Biden. I was 100% sure. Once Biden dropped out, I really lost all my sense of this because Biden was something people were familiar with, but people don't know Harris. They really don't know what to expect. So we'll see.
So now I know why you're not on the prediction markets because you don't. Okay. All right, Mish. That was a really great talk on commodities, on the markets and everything. And we're going to get you back. I'm going to get you back on again real soon, Mish. We really enjoy it. Mish Snyder, Market Gauge, Market Minute, former floor trader. Thanks again, Mish. We'll talk to you again soon.
Thank you, guys. So great to see you.